So now, without further ado, we'll welcome Paul Davenport and Greg Shallard, who are working with Affinity Insurance Brokers, and they'll be covering off on some other really, really important topics too. So welcome, Paul, and welcome, Greg.
Good morning, Andrew, and everybody else. Thanks for having us along. I suppose insurance is an extremely topical issue for the industry at the moment, and the various classes of insurance are causing different angst to different people. We've been asked today to come and talk not so much about necessarily what we do, but to talk about what's happening in the industry and perhaps why, give some explanation as to why those things are happening. And then if you want to discuss anything further, we'll do our best to sort of give you input. But I think it is really important that we understand the environment in which insurers are currently working in. And so what we'd like to do is give you a bit of insight into how insurers make the decisions they're doing and why we're in such a distressed market at the moment in relation to outdoor and recreational activities, and why insurers are not wanting to play in this space. So I guess it is important that we understand their perspective of how things work, because typically we look at things from our view and we say, insurance is too dear. That's typically the comment that we get and hear all the time. Oh, it's too expensive. Oh, it's too expensive. Or it's gone up 100%, or it's gone up 200%. And in some cases, it's gone up 500%. Understanding why these things happen and what's behind it, I think is a good start before we start to figure out, okay, what have we got to do about it? And how, as an industry, we should be responding. My concern is that in the past, and still to the present to this degree, we still, if you like, are asking the insurers to tell us how to run our business. And so the products are designed and primarily have been designed because we let them dictate to us how we go without understanding or letting them understand what we go through, and equally us understanding what they go through. And so I think one of the things that I'm going to throw out early is that rather than, we need to pivot conversations. And the first thing that I'm going to ask you to consider pivoting is rather than look at the cost of insurance, try to get an understanding and a comprehension of the availability of insurance. Because I can assure you, having access to insurance is way more important, if you like, than the cost. We should be looking at the cost just like we do any other business cost. But understanding too that whilst it needs to be viable for us, the reason insurers aren't playing is because it's not viable for them, and understanding that timeline. So what I'm going to do is I'm going to ask Greg to just give us a bit of insight from an insurer's perspective. What are the influences, Greg, if you could just run through some of the influences that affect the decisions and the decision-making, especially in this industry sector that insurers are having to deal with?
Sure thing, Paul. I think I've got the screen sharing going today. With the insurers, there's a few moving parts. We often think of it being just money in, money out. We receive money in on premiums and pay out money on claims. But there's a few more things than that. And in the past, when there were strong investment returns, because what insurers do, especially in the public liability space, where claims might take 2, 3, 4 years to develop from the actual moment of the incident occurring, they go and invest that money. They invest it in bonds, markets, the share market and things like that, and also property. And in the past, talking to a few of the old guard that have worked in this space for 30, 40, 50 years, they used to be able to actually run their books at an underwriting loss, where they paid out more claims than the premiums that they received. So they could pay out $1.2 million worth of claims on $1 million premium and still make money that they need to honour their shareholder responsibilities and things like that. But unfortunately now, we all know what the current economic climate is like. Low interest rates, low bond rates, limited returns on certain classes of investments. The insurers are not able to cover the losses from the underwriting end. The other thing as well, which drives the public liability, is what we call reinsurance. And what insurers do when they take out a policy for you, they reinsure it. So they might say, well, we're comfortable insuring the first $2 million worth of the claim. But in Australia, we have crazy high limits that our parks and our governments require for us to operate, being $20 million in a lot of cases. When we look at other jurisdictions around the world, often they have $1 or $2 million limits. So we're asking insurers to come to the table and provide $20 million, and we think we want to pay a very little amount. Those insurers then pass on those costs. Now they go into global pools, which include property, event cancellation, and other things like that. And those have been significantly stressed by cyclones, earthquakes, the COVID-19 losses. They're all affecting the reinsurance costs for the insurers. So now they're having to increase prices to also pay their insurers. The other really big thing at the underwriting end is expenses. Now, everyone's probably aware of the Hayne Royal Commission that's occurred into the financial services and insurance sector. There was a whole bunch of regulatory changes that were required for insurers and brokers as part of that. Now, when you have the significant changes that are required, there's a lot of changes that need to go into the business models of the insurers. They need to pay lawyers, spending hundreds of thousands of millions of dollars. So what they're seeing is their expenses are actually going up to still trade in the same way that they were trading previously. And all of this is then having this underlying effect on the seesaw of in and out. And what we've seen now with also the increasing in claims, when people don't have jobs, they remember that their shoulders still sore from 3 years ago from a rock climbing accident they have, they're more likely to claim. And lawyers' fees are also going up too. And as a result now, the insurers are having to rebalance their portfolios to say, hey, we need to get a bit more premium in. But what ends up happening is if their losses are so out of whack with the money that they've got coming in and they're losing 100, 200%, they know that clients are not willing to cop a double or tripling in their insurance premiums. So they say it's actually better for us just to pull out of the market. And now we're left in a situation where no one wants to play. And as you start having one or two leading insurers pull out, it has a flow on and ripple effect like a house of cards, which is what we're seeing now.
So thanks, Greg, and that just gives you a very high overview, I suppose, of what the insurers are battling with and going through. And I suppose then what we're trying to do is then look at, okay, how do we translate that into what we're doing? And if we just drop out of the slide, there's slides there for a bit, Greg. That's what's happening to the insurers and how we go. Typically what's been happening also is that people are looking at insurance as, you know, often takes a grudge purchase. It's something we have to get. And in order to get our license, we've got to do this. So the whole discussion around insurance has typically been a negative thing. Whereas in actual fact, you know, we've got to start switching that around and start seeing, okay, what do we gain from insurance other than just simply, because we have to? What is the purpose of it? And you know, we've seen a whole lot of things that have hit the industry, a whole range of people that are making claims on the nonsense claims that do enter into it are quite extraordinary. And what insurers have done typically, because they're removed or out of action, it has been cheaper for them to actually just pay out a claim, get rid of the thing out of the road, because their understanding of the insurance, what the ramifications of that are, or however they go, it's a straight financial decision they make, and the implications that that's had on industry over time have been enormous and quite costly. And that's partly because we as an industry have kept referring to, okay, what is it that the insurance requires, or what do they do, and we do the minimum best to do it. Part of the challenge for us as an industry is starting to look at, okay, how can we start pivoting the conversation when insurers are wanting to get into this space? How do we pivot the conversation back to how we manage risk? And as an industry, we have not got a lot to offer when it comes to that. So an insurer, when they start to look through and start to provide a premium expectation for a particular business, they've got a whole range of questions that they need to require. So there's a whole lot of underwriting criteria that they're trying to tick. And they've found that there is no shortcut in doing this. So they've got to individually underwrite each and every business. We've in the past, and oftentimes we've looked at various accreditation models, for example. And if they're providing insurers for, say, let's just pick something in the health industry, which is really easy, but if they're providing insurance for a particular type of health professional they're doing, say, let's say an osteopath, they can look at it and say, okay, they're a qualified osteopath, they're registered with their osteopathic, organisation. This is the minimum requirements. These are the expectations for that. So there is some controls, some mechanism in place. There's disciplinary action that can take place if they compromise anything, and so that there's a level of faith in how that area is managed. In our sector, there are so many players that get involved, and so many lines that are in there, and the accreditation models from the insurer's perspective have not been able to meet the various underwriting criteria that they've got. For example, I'll just give you an example, but you would expect that if you were hopping on a zip line, you would expect that zip line has been engineered, has been constructed properly, and has been load tested to do the job. I think that's a fair assessment from most people in something like that. The reality is that most zip lines across Australia have been manufactured in-house or on-house. There's little or no engineering that's gone to many of them, and the testing has been done in-house, and someone would visually inspect or do, and there oftentimes has been no load testing on that particular operation. And if it was done maybe 10 years ago, maybe 7 years ago, we don't know. That's the kind of thing that the insurers have been battling and coming up across. So when you couple that with what Greg has just said, and we've got a slide here just to jump out of that for a second on the sustainable capacity requirements of insurers. What we're asking them to do is we're marketing these things across a range of insurers. So if you look at, and just a really simple visual for you to look at, if we were to spread our $5 million across 5 insurers, you would be looking at $1 million blocks in each of those. And a $2 million claim, 2 to 3 million is a typical, let's say, a death. Death is often one of the cheapest issues. And we all know there have been a number of deaths in a range of activities that are here. And we're not trying to minimize this. We're just looking at the actual physical cost of these. So a cost of a death would typically be between $2 and $3 million to an insurer. So if you were to look at that, if we were to spread that across 5, you can see there 2 or 3 would sink, most of those insurers. Whereas if we pool our resources towards fewer insurers, which is sort of counterintuitive to trying to get competition going, but we need to make sure that it's actually viable for them, the ability to actually then pay on a claim is significantly less of an impact. So what's happened in our areas is there've been a number of insurers that have been playing in and out. Typically, the length of time that an insurer has been in the market, I think, Greg, if I recall, is 3 years, sometimes less. So you might be with the same broker over a period of time, but your insurer has changed on a pretty regular basis as a different syndicate would come and go. So the ability for them to actually build up reserves, the ability to then collect premium pool in order to then pay out has been limited. So the claims numbers have been high, the occurrence numbers of those things have been high, but it's been spread amongst a range of insurers that have not got the capacity to pay. And so you've got four or five of them running at a loss instead of one running, even at break even. So trying to talk about pivoting the conversation rather than insurers dictate to us how they do things, which is how things have been done, trying to partner with insurers and get them to understand our capacity to manage risk is really, really important. And if we start thinking of the outcomes, of risk management, just from a business sense, We've done quite a bit of research into how this is going, and Greg, you might want to talk to it. But what we're seeing is that effective risk management has a whole lot of good outcomes for businesses. Ultimately, they've got better return customers. People are happy to come. Their volumes actually increase because they're selling a better product. It's a safe and enjoyable experience. I think we've got to understand the environment in which we work in, and I think we've got to look also as an industry as to what we've got to offer. I remember talking from a crisis management perspective over many years, and people are less equipped now that go out there in understanding how to manage risk, how to understand risk, how to respond to an emergency or a crisis that occurs, because they just don't get the education, they don't get the practice that they did in previous. They haven't got the exposure to it. As we're coming out of COVID, we've got a whole lot of people that have been locked away for effectively 18 months to 2 years. And as they're coming out, are our staff equipped to manage this? What are the fatigue levels? Have we been able to they're coming from nothing to something. How are we managing that? Same for the clients. How are we coming out of this? So to be able to think these things through, open up in a reasonable way that's not just, quick, we need to get back to maximum capacity as quickly as possible, but what considerations have we put into this, how we manage risk and how do we do it. On the slide there, it talks of control of overheads. How do we manage, because things have been left vacant. I've heard so many people saying, oh yeah, my stuff's rusting away, we've got to get it going again. Well, that right there is a flag, isn't it? That we've got stuff that hasn't been used for a period of time. How do we manage our equipment? How do we get it back? Every time you do have an injury to a participant, every time you do have an injury to a staff member, and that's probably one that we really underestimate in our industry, the cost of injuries to staff. So trying to actually figure out how we control these costs and try to control these issues, sometimes we can see that an investment in risk management is really, really critical. So I guess what we're trying to do is let's pivot this conversation rather than what we're saying, how much is the cost of insurance, to say, okay, how much do we invest in risk management? How do we communicate that back to the insurers so that they understand that we do understand as an industry we're getting there. The reality is that our industry, and we can probably drop those slides out again, Greg. The reality is for our industry is that as an industry, we don't really have the volume to be able to share the risk around as much as we could and we should. And so trying to make sure that we portray ourselves as a collective industry is actually a very, very difficult thing. And Andrew, you can probably attest to that, on a regular basis, that you've got a whole lot of industry sectors that continually sort of want to stand alone. I know there's been a lot of press lately that the amusement industry is under extreme pressure, and they've tried to link themselves in with the outdoor recreation and outdoor educational sectors in trying to increase the volume pool. But then what you need to do is make sure that do their risk mindset align with what yours do? Do the risk assessments align with what yours do? So I guess what we're saying is that if we're looking to get a solution or an insurance solution, which is just part of the problem, if we're looking to get an insurance solution, we do need to understand the pressures that insurance are doing. And we actually need to try to, and in our view, we need to actually partner with an insurer that's prepared to look at this as a long-term sustainable outcome. Therefore, we've got to start seeing that is going to be different. There will be players that come and go all the time and sell a product on price. And if we continually buy that product on price, we will have this cycle that's continued to go with little or no control of the outcome. So I think we need to look at, how do we actually find a partner that can look at a sustainable solution, not providing it as a product that they want to sell us, because oftentimes we're seeing, and Greg can give you an example after example, of providing a product that doesn't actually match what we need. And our industry, and brokers in particular who don't understand the outdoor industry and understand the implications of it, are prepared to sell a lesser product because the client suggested that's a good idea, not really realising the impact that this is going to have the long term and the medium term on both the client but also on the insurers. So I guess what we've tried to do is just picture that out. Greg, do you want to just throw in a couple of those examples, then we'll throw it open to questions for people as to what they might want to discuss.
Yeah, I think that the biggest thing is for the insurers is they have to manage their exposure to the lowest common denominator. And what they've been seeing is that when they look at individual businesses, they can identify that there's some really good operators out there. But on a whole, they still see the outliers and a few too common businesses that don't even know about things like the adventure activity standards. So what they then do is go, well, the AAS says this, we're just going to put a blanket exclusion on any claims that don't meet this. Or if you don't wear a helmet when you're rock climbing, you're not covered. But there are examples in rock climbing where you may be doing a certain climb, like a crack climb. It's not actually feasible to wear a helmet in that specific situation. Now, you might take it off, do the route, and then put it back on again. And it doesn't then account for the unique business needs for each situation. So now the insurers are dictating exactly what's going on. And what we need to do is be able to give them confidence as a whole industry that there are these systems and measures in place, that they are being protected at an industry level, not just as an individual level. Because if they're having to do individual assessing every individual risk or client to an activity level, a risk assessment level, operating procedures and things like that, it's not feasible for them to do it at a large scale. And those things like underwriting expenses start to blow out and then actually affect our premiums. And sometimes they go, this is just way too hard. And this is where there's one more slide here where we come back to, and this is part of the research, and a lot of people would have seen this as Rasmussen's risk management framework. Having this industry vertical, which comes all the way from government into the state associations like OV, then into the businesses, that we have this integrated system from the individual worker and activity all the way up to the regulators and government. And that's where I think the insurers have identified that we're still going, hey, we've got outdoor educators, tourism, camps, and we've got 5 different verticals that are all spread out. And what the insurers are looking for is some unity and a nice consistent risk profile across that. And this is one way that it could be done.
So, Andrew, I don't know if we've gone the direction you wanted us to go, but trying to give people an understanding of what's happening in the market and where we're seeing it. We've been working for the last 12 to 18 months on developing a partnership with a specific insurer, recognising these things. But I suppose the thing is that the speed to market is considerably long, because we've got a lot of educating to do with these guys. We're hopeful that solution will be available. It will be available in early 2022. But I guess understanding that these things have been going on, I'm really surprised, and I will just throw this out to finish it off. I've been consistently surprised over our time. We've been talking about this sort of stress to the market for 3 to 5 years. That we've had these conversations over time. The amount of people that we get coming to us that have never heard of the AAS, for example, is extraordinary. So there is a big communication gap within the industry that does need to be led. So this collectiveness, this integration is actually really, really critical in order to get that volume, if you like, for insurers to be able to enter this market with confidence, and to make it sustainable and viable, not just for them, but for our industry as well.
And I think too, Paul, the question then we say is, oh, well, why don't people just do it voluntarily? And don't we have people that want to do the right thing? Unfortunately for the insurers, they see time and time again, whether it's at the claim and they say, oh, well, you told us you do it this way. They don't follow their own procedures. But also we see businesses actively avoiding the standards. I remember hearing and seeing a presentation where a business got a quote which required compliance with the Australian standards. The business said, we can't afford to comply. So they asked their broker to seek cover without the compliance requirements. And then the insurer actually provided, yes, albeit at an increased price, a quote that actively avoided the Australian standards. So we're seeing things like this occurring, which is where the confidence has been lost for the insurers. And we've got to go as an industry, how do we have an accountability system that stops these things occurring? And this then flows over to things like land use, climate, cultural sensitivity, because we know there are operators out there that are doing the wrong thing that affect everyone else. So how do we make sure we have a quality control system in place for our industry?
Thanks, Greg, and thanks, Paul, very, very much. I might just, because we're close on time, there's quite a lot more work to be done, that is for sure, and we'll continue to work hard on communicating and continually reminding people about the existence of the AAAS. Laurie Mode, I see, is on the call at the moment, who's the CEO of Outdoors New South Wales ACT, and she's the facilitator on the Outdoor Council of Australia Accreditation and Insurance Working Group, which was formed in the middle of the year to work over the next couple of years on these types of challenges. So there are some things happening at a very high level, and very happy to chat to people offline about that. Please just link in with me. But Robin, I just wanted to come to you to see if there's any particular questions in chat, or if anyone would like to put their hand up. And that includes you, Laurie, as well.
Yeah, Andrew, we've got Earl D has a raised hand. So do you want to just...
Yeah, for sure. Earl,
have a chat?
Say hello to everyone. Thank you.
Hi, everyone. I'm Earl from Western Victoria, Grampians, Gary Word area, and I run Hanging Out, a business that I've owned since 2001, and safely, without incident for all this time. And obviously at the moment, with my insurance policy coming up for renewal at the start of next year, there is some obvious concern about whether I'm going to be able to operate into the new year. And I really appreciate all the work that you lot are doing there, Greg and Paul especially, as I'm with Affinity currently. And just knowing this information does provide some reassurances that, you're working hard for us. But I obviously, as a business owner and taking bookings into the new year, also need to provide my customers some reassurances that I can conduct the work. And I'm just wondering, is there sort of like a fail-safe coming into the new year where I can provide some sort of certainty that I will be able to operate with insurance?
Yeah, thanks, Earl, for the comment. And what I'll try to do is direct it more generally rather than you specific, because each individual circumstances are different. But what I can say to this group that are on this call is that we've been unable to write new business for several months now. And that's a choice that we and our insurer made because given the claims environment and the issues that were going on, and also to the volume of work that we've had to encounter during COVID and the likes, to meet all of those resources, our focus has had to continue to just focus on the clients that we've got, which has made it very, very difficult because a lot of people have come and said, oh, can we do this? Can we do this? And we've been unable to help in a new business light. That's a choice that we've made. I guess, we as a business have decided that we're not interested in providing band-aids for individuals. We're looking to try to provide a long-term solution for the industry. And so we've put our resources into that. So from our existing clients, they've been able to trade as normal. Our renewals have been going on as normal, but we have been unable, and the insurer's not been prepared to take on any new business. That gives you a bit of an idea of the environment. So the intention is to keep being able to look after our existing clientele, and so try to provide you some reassurance. But contact your broker. And this is, I guess, the real message in this. Oftentimes we talk to people and they often don't talk to their broker other than once a year when they get their invoice. You need to get a relationship going. These people need to understand your business. And if they don't understand the outdoor recreation industry, then find somebody that does, because they need to have expertise in this field, and they need to be able to go to bat for you. That's not a direct answer to your question, but to give you an idea of the environment, that's what it's been. Our focus has been, we can provide renewals for our existing clients. We just cannot put on new clients. Now, that'll change in the new year because of the new program that we've developed, but it won't change the conditions and the expectations that we'll have of our clients to be focused on risk, to do those things. Because ultimately, it doesn't matter what's happened in the past, things will go wrong, and that's when you want insurance for. You don't want to be deliberately saying, oh, it's okay, I'm insured. You want to act like you're uninsured, but when things go wrong, you want it to know that it will pick up and will be there for you, and that's continues to be the intention.
Yeah. Thanks for that answer. Can I also just ask one other question? And excuse my naivety in with this. With other nations, say, for example, the United States, one would expect that they would not have similar issues to what we have here or what we're experiencing currently. But the insurers, or the underwriters rather, seem largely to be multinational organisations or backed by. And is there a way our industries or something like this could sort of collaborate in a way more internationally that can provide, the insurance, that longevity that we're looking for, the continuity, and an international scale rather than focusing on Australia? Does that make sense?
Yeah, I think it definitely does. I think one of the biggest things, that the first thing to look at is the regulatory limits that required in Australia. Parks, government, schools want $20 million. So we're expecting the insurer to put up 20 mil. In the USA and other jurisdictions like that, it's normally $1 or $2 million. So that's probably the easiest way to say it, is that if the Australian government and organisations said, hey, you can trade with 5 million, 2 million, it'd actually make it a lot easier for the insurers, because I know that's one of the biggest pressure points. They're scared of getting a $20 million claim. So they're having to budget for it, or they're just too risk averse in that space. But the other thing is what they're seeing is that the Australian industry doesn't have a solution to itself. So we see people going and getting a New Zealand business accreditation, a US one, an international one, and they're going, well, why isn't there an Australian standard? And that's probably more what we're seeing, is the lack of integration and collaboration in Australia, and for its unique risks. And I'll use New Zealand as an example as well. They've got a different legal system around high-risk adventure activities. And the comment then you hear from there is, well, we kill too many people. Because there isn't actually an accountability system there, their risk controls then end up suffering as well, because they've actually got a backup plan.
That is coupled with the different legal environment that we work in here in Australia as well. And, so every country, in often cases, every state, depending on which country you're in, has different legal environments that they're working in as well. So, Australia does have a lot of ground to make up. That's the reality of it. Whereas in actual fact, I think from a risk perspective, we're actually significantly further ahead than many. But I guess, we can't demonstrate that. We can't show that.
And I think, Paul, that's where, and I said that Dr. Claire Dallett's on the call. I think there's some work going on in the background and with the upload system, but then also what's next for that particular system. But yeah, Paul, definitely get your point. Claire, I don't know whether you want to quickly jump in, then maybe Laurie, and then we might have to finish up, I think. But thanks, Earl, very much for your queries. Very much appreciate your input. Claire, I don't know, will you want to touch on anything? Thank you. We've not got any sounds, Claire. Sorry. I don't know whether it's the headphones plugged in or still no. No. Oh, sorry. We'll have you back soon, Claire. Otherwise, very happy to take something in chat. Yeah, thank you. Sorry about that, Claire. Laurie, you might have something to contribute here, so please feel free.
Thanks, Andrew. Yeah, and thanks so much again to Greg and Paul for everything that they're doing in this space. I suppose just to catch everyone up, but when we had the Summit Working Party start back in May this year, we noticed that obviously this was already flagged then. As Paul said, it's been flagged for some time, but it was a consideration that we knew that a working party needed to look at this in conjunction with other opportunities to help navigate us through this, and that became the Accreditation and Frameworks Working Group. Needless to say that we do not have, and it's been brought up in sort of roundabout ways already, that we do not have a strong system in this country around accreditation that stands up to scrutiny by landowners, land managers, but also the insurance industry, amongst other stakeholders as well. So certainly that's been our discussion as part of this working group, and we're looking at how we can provide something, if not adding value to existing programs or creating a new program or whatever it needs to be, but providing the industry something that will help get them across exactly what Greg said, this risk management opportunity that we have, and looking at our own backyard and making sure that we stand up to scrutiny with a lot of our operations and risk mitigation. So again, there's a lot of work that's going on in the industry, and what I love about it is we're all talking about it and we're all collaborating, and we're not heading off in 8 different avenues of directions. We're actually all trying to get to the same finish line. So yeah, hopefully we'll have more information on that in the next couple of months. But yeah, a lot of great work is happening.
Thanks so much, Laurie. Appreciate you being here today. Paul and Greg, really thank you for your connecting up and connecting quite a few of the dots for us today as well. I don't think it'll be the last time that we invite you on. It's been tremendous to have you, and we'll definitely look forward to, I'll connect with you later, Claire, as well. So Claire Dallett's from Risk Resolve. So if you want to Google Risk Resolve, Claire might be able to help you out if you did want to connect with Claire. I think something might be coming into chat as well, but thank you very much, everyone, being here today. I hope it added a whole lot of value, and yeah, we'll be back to you very soon. We've now also got, which I mentioned before, we've got the other session, the digital session coming up around diversity and inclusion, and that comes up to us in a couple of days' time on December the 3rd at 10:30 a.m. So we look forward to seeing you then. But Robin, anything else in chat there?
No, Andrew, I just confirmed that it's actually December the 2nd for the digital series, not the 3rd. There is, Claire has actually put in some text. We're 15 minutes over, so maybe we'll follow that up later.
and we can digest that for a minute
Yep.
too.
Cool. That's in the in the chat, and we might add that to our
Perfect.
video. Yep.
Yep,
Cool.
and also newsletter. Thanks, Claire, for that. I know there's quite a lot behind the scenes. I've been tweeting with David about it. But thank you very much, everyone, for today. Stay safe, as Greg and Paul would want you to. And we'll look forward to catching up with you soon. Thank you, Paul. Thank you, everyone.
Hey, Andrew,
Thanks, Paul.
I know
Thanks,
it's time, but I think it's really important we finish on the note that we can't lose sight of the importance of the work that you guys do. Don't think that this is too hard, please. We can't stop doing what we're doing. What you guys do is more important now than it's ever been before to our community. And I think we've got to really look at addressing these issues so that we can actually have the impact that we should be having on society today. So I just wanted to throw that in. Because it's hard doesn't mean we give up.
And I think that's the key thing, is that both Paul and I come from the industry, have worked in camps, been guides, done all of this stuff. And we want to empower you guys to go out there and do things rather than feel it's like a crutch that holds you back.
Yeah, thanks, Paul, and thanks, Greg. Thanks for a whole lot of people's support on here too. And yeah, we'll keep working hard. Just because heart surgery was going to be difficult, the scientists didn't give up, did they? And now they save millions of people a year. So we'll keep fighting the good fight and work together.
Good analogy. Thanks, everybody. Good.
Okay,
Thank
thank
you.
you. Have a good day.
See ya.